Hello traders, you're welcome back to the Forex Geek channel. If you're looking to take your Forex trading to the next level, then you are in the right place, okay? In this video, we are going to be unlocking the power of the MTF RSI strategy, okay? So this is quite an effective strategy, and you can actually use this strategy to enhance your trade precision using multiple time frames, okay? Now, before we jump into the details, don't forget to hit the like button, subscribe to the channel, and turn on the notification bell so you don't miss any of our future trading tips and strategies. Now, let us dive right in. So what exactly is the MTF RSI strategy? Let us break it down, all right? MTF stands for multiple time frames, okay? And RSI stands for relative strength index. Now, the RSI is an indicator that measures the speed and change of price movement. I'm just going to add RSI to the chart right away. Okay. Now, this indicator helps identify whether an asset is overbought or oversold, which can indicate potential reversals. Okay. Now, the MTF aspect of the strategy simply means we use this RSI indicator across multiple time frames, such as combining a 1-hour chart with a 15-minute chart or a 4-hour chart with a daily chart. Okay. Now, why do we do this? Okay, because we are looking at just one time frame. Because looking at just one time frame can sometimes give you a limited view of the market. Okay, so that is the reason why you would want to toggle across a couple of time frames in order to get a wider view of the market. Okay, and you might miss important trends or reversals if you are focusing on just one time frame, and that could affect your trade. Now, why does using multiple time frames matter? Well, when you analyze a single time frame, you are seeing just one snapshot of the market, okay? And that might not tell the whole story. By using multiple time frames, you can get a much clearer picture of the market's overall direction and trend. For example, if you are trading on a 15-minute chart, right, and you are looking for an entry, okay? Let's just look at a very quick example, right? Now, let's say you are looking for an entry on the 15-minute chart. Me looking at this 15-minute chart, okay, we had a bullish move here, and then we had a breakout to the downside, and we even had a retest. So ideally, you might be looking for sell opportunities for the fact that we already had a breakout from this point, right? We already had a breakout, we had a breakout around here, right? So you would likely be looking for sell opportunities as we are anticipating further declines on the 15-minute chart. Okay, now if you go to the 1-hour chart, for example, the 1-hour chart might actually present a different view. Let us look at that real quick. You can see that we had a bearish trend around here, right? And then we had a breakout. Can you see that from the 1-hour chart? We had a breakout from this bearish trend, and then right after this bearish trend, we can see that we actually have a support level, a support zone around here, right? You can see there was a rejection here, and there's another rejection here, and you can see we're coming to have another rejection around here. And then looking from this time frame, you can see that we are somewhat having a bullish trend forming. So by the look of things, you can see that the 15-minute chart is giving us a smaller picture, while the 1-hour chart is giving us a wider picture. And it is ideal that you follow the trend on the higher time frames, because those ones tend to be more valid, all right, or they tend to last longer. All right, so that is the reason why combining different time frames gives you a much more reliable perspective when it comes to making trading decisions. So having identified a bullish trend on the higher time frame, then you should be looking for buy opportunities on the lower time frame, perhaps waiting for a breakout again in the upward direction before you enter your buy trade. All right, let's talk about how you can actually set up the MTF RSI strategy. It's really simple to get started. The first thing is to choose your time frames, okay? To begin with, you want to choose at least 2 time frames. Typically, the higher time frame is used to analyze the overall trend, while the lower time frame helps, with precise entry signals. For example, you might use the 1-hour chart to analyze the overall market trend, and then you use the 15-minute chart for your entry points. Now, the second step is to apply the RSI indicator. Okay, you would want to apply the RSI indicator to both charts, both the 15 minutes and the 1 hour. All right. The default setting for the RSI is usually a period of 14. All right. It's usually a default of 14 period, as we can see here. Okay, and it ranges between 0 to 100. Now, the key levels to watch are 70 overbought and 30 oversold. When the RSI crosses these levels, it indicates potential reversals or corrections in the market. And then the final step is to look for confirmation across time frames. This is where the magic happens. All right. On the higher time frame, okay, on the higher time frame, look for the RSI to be either above 50, which is going to be bullish, or below 50, which is going to be bearish. Now, if the RSI is above 50, it shows that the market is generally in an uptrend. All right. If then on the lower time frame, you're going to wait for the RSI to show a confirming signal, whether that's an overbought or oversold condition that aligns with the trend you identified on the higher time frame. Okay. For example, if the 1 hour chart shows an uptrend with RSI above 50, you will want to look for a buying opportunity on the 15-minute chart when RSI dips below 30, all right, and starts to turn back up. But in the scenario where you have RSI below the 50 level showing a prevailing bearish momentum, then you might want to look for sell opportunities, but you got to get the confirmation from the RSI on the 15-minute chart as well. Okay, then you'll get your confirmation from price action as well before you go ahead to enter the sell trade. Okay, you might be wondering, why does the MTF RSI strategy work? The reason is simple. Okay, by combining the broader market trend with the more precise signals on the lower time frame, you are stacking the odds in your favor, right? You're not just relying on a single signal or time frame, but instead you are using multiple confirmations to make your trading decisions. All right. Now, this strategy helps reduce the chances of getting trapped in false moves or reversals. If you were using only a single time frame, right, you might be tricked by a temporary market pullback, especially if it's a lower time frame. Okay, but by aligning it with the larger trend on the higher time frame, you gain better insight into whether the market is likely to continue in the same direction or whether a reversal is actually happening. Now, with any strategy, of course, there are some common mistakes to watch out for. And let's just go over a few real quick. The first is ignoring the higher time frame. Okay, one of the biggest mistakes traders make with MTF RSI strategy is ignoring the broader trend on the higher time frame. If the trend is clearly bullish on the 1 hour chart, but you are trying to short on the 15-minute chart, you could be going against the larger market direction, which increases your chances of losing the trade. Secondly, do not overcomplicate things. All right, it's important to keep things simple. The RSI is a straightforward indicator, and combining it with multiple time frames is already a powerful tool. So don't overload your charts with too many indicators. Just focus on the RSI and price action. All right, you're good to go with that. And then finally, do not fail to wait for confirmation. All right, one of the most important aspects of the MTF RSI strategy is waiting for confirmation. Don't jump into a trade just because you see the RSI touching an overbought, overbought or oversold level. Okay, wait for confirmation on both time frames, all right, before you go ahead to enter your trade. Ensure that the trade aligns with overall trend. Okay, now here are some quick tips to help you succeed with MTF RSI strategy. First, you have to try to confirm signals with price action. You can actually decide to add other indicators to your chart, but try to keep it simple. Okay, you can decide add moving average, for example, if you wish. All right, but always pay attention to your price action. Pay attention to support and resistance zones. All right, make use of trend lines. Very important. Okay, it's very important. And then be patient and wait for the right setup. Don't force trades. Wait for the right conditions on both time frames before entering a trade. And finally, practice on the demo account. Before applying the MTF RSI strategy in live markets, practice on the demo account to get comfortable with how the RSI behaves across different time frames. And that is a wrap for this video. I hope you now have a better understanding of how to use the MTF RSI strategy to unlock precision trades by combining multiple time frames. Now, this strategy can give you a huge edge in the market by helping you confirm signals and make smarter trading decisions. If you found this video helpful, don't forget to like, subscribe, and click the bell icon for more Forex trading strategies and tips. I look forward to seeing you in the next video. In the meantime, Thank you for watching. Be sure to check out other videos on the channel to deepen your trading knowledge and refine your strategy. Stay tuned for more.